Mortgage rates have hit their 11-month high at 6.5% on the 30-year. Then you've got the tensions going on in Iran that are causing higher fuel prices. And then, despite all of that, you've got buyers that are still taking advantage because there are more choices in the market. Welcome into Routes and Real Estate. I'm Anthony Armstrong, realtor with Next Home on Main in Frisco, Texas. And this is your daily real estate news you can use. As you have heard, and like I was starting out with, and you can see right here, boom, this article right here, make it nice and large for you. Homes.com article is saying that mortgage rates jumped to their 11-month high, but even so, some home buyers are finding an opportunity in the increased inventory. So more homes are on the market, means more sellers are trying to get their homes sold, and they want to get a deal done. So what does that mean for you as a buyer, just out of the gate? Yes, the higher interest rates will mean a higher payment, but with increased inventory means sellers are going to have to do something to entice you as a buyer to make an offer and to get their home sold. So a couple things that they're going to do off the jump, probably have some price reductions. And number two, they're going to be more open to having some seller concessions. So let's take a dig through this article and get a little idea of what's going on. Now, everybody always asks, hey, Anthony, how's the market? And frankly, the market's always good. It just depends on what side you're on and where you are at specifically. There was an article on homes.com yesterday where one of the higher executive with Loan Depot was saying that the home buying dynamics are going to remain the same, regardless of the interest rates. Right? If you're in a good position to buy now, then it's a good thing to go ahead and get pre-approved and go through with that process. If you try to wait for interest rates to go down, you may, one, miss out on the home that's on the market for you right now. And then two, you're going to be up into competition with everybody else that's sitting on the fence. If rates were to lower or reduce in the future, you go out and you do yourself a refinance and then you jump on that new rate. But if you're able to go right now, you can go ahead and get in the market by getting your pre-approval. So from this article, it says in the week that ended Thursday, the 30-year fixed rate mortgage averaged 6.58%, according to mortgage giant Freddie Mac. It's up from a week earlier, but it's still lower than this time last year. Last year, the average was 6.47%. And then your 15-year rate fixed mortgage also increased, averaging about 5.96. That's up from last year, comparable as well. So knowing that the interest rates, they are up, and they're still volatile, they're still down from what they were the year prior. You're digging a little bit deeper, that talking about the rising fuel prices. Rising fuel prices are putting pressure on rates as well. The conflict between the United States and Iran is a major contributor to the recent run-up in the mortgage rates. And it's sort of a chain reaction. As oil and gas prices rise, long-term inflation expectations rise, putting pressure on the bond market and in turn on the mortgage market. So everything that's happening in the world puts pressure on the real estate market, which then puts pressure on you as a buyer. So here's a cool chart that they have in this article. I want to make sure I show it to you. You can have the full screen rather than just looking at part of me. I'll go down here on the bottom. The average 30-year mortgage calculations. 5 years ago, a $400,000 home had a 2.78% interest rate. My gosh, that looks beautiful. The monthly payment was $1,600. Interest over the term of the loan would have been $190,000, $158. Total paid $590, $158. A year ago, $400,000 house, you're looking at 6.74% on that interest rate, $2,592 on the payment, 530,000 for 33,024 over the life of the loan for interest, and then $900,000 over the life of the loan, 930. And then as of today, July 23rd, 2026, that $400,000 home at a 6.58% interest rate is at a $2,549 payment, paying $500,767 over the life of the loan in interest at a total paid at $917,767. Whew. That's a lot to read. Just a bit further in the article, it mentions that the mortgage rates aren't likely to go down until the tensions in the Strait of Hormuz actually start relaxing. They go from the ceasefires to not ceasefires and letting people through and then not letting people through. That volatility over there does not make investors confident on this side. But the inventory increase actually creates a bit of opportunity. Some home buyers are able to capitalize on the increase of inventory on for sale homes. Data from homes.com showed that the number of listings was up 4.2% in June compared to a year earlier. That means you got more houses to choose from, y'all. At the same time, price growth has remained relatively modest at just 1.5%. So it's not going up as fast and as drastically as it was in the past. And it is, the homes are, there's more to choose from right now. And to bring it back to a local conversation, when I'm talking about inventory, I'm bringing up my Netrist trends here. I'm just going to look at homes for sale right here. And I have 4 different areas pulled up. Number one is the entire MLS, so that's going to kind of skew it. So let me drop that off. Here we go. We're looking at Collin County, McKinney, and Melissa, Texas. So Collin County is the county that holds Melissa and McKinney and Frisco as well. So you see in Melissa has been relatively flat. There's currently 206 homes for sale. It was 215 last month. In McKinney, ever since way back in basically December and January, you've seen an increase from 877 homes, 171 in Melissa, and 5,137 in Collin County. You work your way all the way over here to May and June. There's 7,000 homes for sale in Collin County, over 1,200 in McKinney, and like I said, 200 in Melissa. So more inventory is hitting the market. It naturally happens when you come out of those winter months that people start putting their homes on the market, but you're seeing it continuous. You're seeing continually more homes are hitting the market, and that can be a good thing for buyers. Why can it be a good thing for buyers? Because people need to sell, and they're going to be more willing to offer concessions. All right, they're going to be willing to offer some concessions. The article that was read yesterday, that we can mention today, is that mortgage applications actually increased last week. And it was a 6% increase in purchase activity. So the 2 types of mortgages that you're going to see people apply for are purchases and refinances. Now, you saw that previous chart when the interest rates were 2.7%. Anybody that had a rate that was 4 or 5, 6, or anything above that probably tried to jump in and get in on that 2% rate so they could refinance all their debt into that loan. But if you're sitting at the 6.7% right now, you may not, that may not be much lower than where you're at currently. Now, I also think about the people that bought their homes in 2024, 2025, when they bought on potentially a 3-2-1 rate buy down, where the first year they're 3 points lower, year 2 it's 2 points lower, and by the year 3 it's going to be 1 point lower than that base rate. So once again, based on that last chart, last year at this time, interest rates were at 6.74. If you bought on a 3-2-1 rate buy down, your first year would have been a 3% rate, 3.74. Second year would be 4.74. And then your third year would be 1% lower than what last year's market rate was at 6.74. It would be 5.74. And then at that point, before your loan, so, however far down the line, whenever that gets back to that 6.74%, if the interest rates are lower than where you would be at, then you would consider doing the refinance. So seeing the purchase rate activity happen last week, it lets you know that buyers are getting off of the fence. They're ready to make their move. They're ready to go out there and get into the market. Regardless of what the interest rates are, they're really going to go take advantage of the amount of inventory. Back to the article, taken together, the increase in activity is a signal that buyers and sellers could be adjusting to the higher rate environment, especially because there's no concrete end in sight, and taking advantage of the increase in inventory is their way into the market. This is a great quote. You can defer life for a certain amount of time, and then you have to stop. Right? You could defer it for a certain amount of time, but then eventually you're going to have to stop. And if you are looking to purchase and you want to get into that game, I always tell people, number one, start out with the pre-approval. It does not hurt to go out there and do it. Talk with a lender. You find out that your lending credit score may be different than what your commercial or your consumer credit score, if you're looking at like a Credit Karma or some public facing things like that. Lenders are looking at slightly different criteria. They want to see if you're able to get, whatever they're going to get pre-approved for. And the cool thing is that you're going to have a number. You're going to know I'm pre-approved for $500,000. And then you could start searching it with those parameters in mind. And here's a little tip from an agent who's been in it for a little bit. In a market like this, start your search a little bit above what your pre-approval amount is, because if you're working with a good agent, you may be able to get that price negotiated down into your ideal range. Number two, don't be afraid to ask for concessions, right? Don't be afraid to ask for concessions. Maybe you want some furniture. Maybe you would like to have some cash for closing costs, and maybe you get your own rate buy down. Just limit the amount of cash that you have to bring to the table. And you may also be able to get to negotiate some repairs as well. And the third thing I would always tell my buyers to do, especially navigating a market like this, is if you find one, stick with it, right? Stick with it, because there's always going to be another house that hits the market. Always going to be another house that hits the market. Buyers looking in a market when there's a ton of inventory tend to get caught by the next shiny thing. They see one house hit the market, they'll love it. You'll go and see it, you put in an offer, or maybe you think about putting in an offer, but there's one small thing that you're not sold on. And then you say, well, let's look at the next house. And then another one pops up, and there's one small thing that you're not looking for. And then that continues to be a trend. You never get off of the bus to make a decision. You need to go out there, have your wants and needs in mind, go make a strong, confident decision, a strong, confident offer, and stick with the home that you find. And if you do it right, it'll be the right home for you. This has been Routes of Real Estate. I'm Anthony Armstrong. I appreciate you tuning in, watching this first episode. I want to continue to do this thing. I want to make it daily. So please hold me accountable. If you ain't seen me or heard from me, message me and say, where's my episode? For anything that you need real estate related, please hit me up. I'll put my information in the comments below. Once again, this is Anthony Armstrong. This is Routes of Real Estate. Be good.